Cryptocurrency is based upon algorithms which control their creation and the transaction that changes which API key they're tied to. The system is infallible, but when humans get into the fray, things can become pretty ugly. The human factor may always be the biggest problem with cryptocurrencies and stablecoins. Mark Cuban wants regulation in the crypto world. Does this call mirror that of many others, or is he simply a privileged billionaire who does not like to lose? We took a closer look at what happened to Cuban and what he's asking for. Billionaire Bitcoin investor Mark Cuban calls for crypto regulation after the price of a radical new token suddenly crashes to zero. But before we get into the video, don't forget to leave a like and subscribe to the channel with notifications turned on so you don't miss any of the new videos that we post. What is cryptocurrency, and especially stablecoins? A cryptocurrency or crypto is a digital asset designed to work as a medium of exchange where an individual's coin ownership records are stored in a ledger existing in the form of a computerized database using strong cryptography to secure transaction records, to control the creation of additional coins, and to verify the transfer of coin ownership. It typically does not exist in physical form like paper money, and it's typically not issued by a central authority. Cryptocurrencies characteristically use decentralized control as opposed to centralized digital currency and central banking systems. When a currency is minted or created prior to issuance or issued by a single issuer, it's generally considered centralized. When implemented with decentralized control, each cryptocurrency works through distributed ledger technology, typically a blockchain, that serves as a public financial transaction database. Therefore, there can be no tampering without all the ledgers being changed as well. Investopedia describes stablecoin as a stablecoin is a new class of cryptocurrency that attempts to offer price stability and are backed by a reserve asset. Stablecoins have gained traction as they attempt to offer the best of both worlds: the instant processing and security of privacy of payments of cryptocurrencies and the volatility-free stable valuations of fiat currencies. Two primary reasons for the price stability of fiat currencies are the reserves that back them and the timely market actions by the controlling authorities like central banks. Since fiat currencies are pegged to an underlying asset, such as gold or forex reserves, which act as collateral, their valuations remain free from wild swings. Gold, however, does not play such a major part anymore, but rather the stability and history of the controlling authority. Even in certain extreme cases, when a fiat currency's valuation may move drastically, the controlling authorities intervene and manage the demand and supply of the currency to maintain price stability. The bulk of cryptocurrencies lacks both these key features. They don't have a reserve backing their valuations, and they don't have a central authority to control prices when required. Their advantage is that more often than not, they also have no inflation and they have no controlling authority. Yes, a controlling authority is a human factor which can come with error, and that is seen especially in poorer economies. Stablecoins attempt to bridge that gap between fiat currencies and cryptocurrencies. What happened to Mark Cuban? Mark Cuban, the billionaire investor and owner of the Dallas Mavericks, who has been investing in Bitcoin and crypto for a few years, has now called for regulation of the burgeoning decentralized finance DeFi market space. Cuban revealed in March that 60% of his crypto holdings are in Bitcoin, 30% in Ethereum, and 10% in other coins. He has recently begun experimenting with DeFi, writing this month in a blog post that banks should be scared of the largely unregulated and burgeoning technology. Does this count as fear-mongering? Cuban issued the call to regulators after he put money into a stablecoin that collapsed, telling Bloomberg there should be a regulation to define what a stablecoin is. There should be a regulation to define what a stablecoin is and what collateralization is acceptable, said Cuban. It's unclear to which regulators Cuban was making this suggestion to, and if he was just putting it out there. I got hit like everybody else, Cuban told a few DeFi investors via Twitter who suggested Cuban had been rugged, a term used to indicate when project liquidity dries up and investors are unable to withdraw cash. Basically, it means that the people offering the stablecoins should have that much fiat currency on hand to pay out, which is rare. USDC has a circulating supply of 25 billion. Tether stands at 62 billion. Do these stablecoins have that kind of fiat currency on hand to make large payouts? We think not, and that may spell disaster in the future. Cuban hasn't revealed exactly how much he lost on the project, telling Bloomberg that as a percentage of my crypto portfolio it was small, but it was enough that I wasn't happy about it. Stablecoins, a type of cryptocurrency that's fixed to an asset, usually the US dollar, have rocketed in popularity and market share in recent years, with the largest stablecoin, Tether, now boasting a market capitalization of 62 billion. DeFi, using cryptocurrency technology based on Ethereum technology to recreate financial products such as loans and insurance without the need for a bank, has surged in popularity over the last year. This in turn has boosted the price of Ethereum. DeFi stablecoins, often attempting to hold a peg to fiat currencies by creating arbitrage opportunities and liquidity between coins, are notoriously risky, with the multitude of similar projects networks collapsing in recent times. Polo Arduino, the chief technology officer at both stablecoin issuer Tether Limited and Bitcoin and cryptocurrency exchange Bitfinex, said in email comments, "It's important to note the pivotal role of stablecoins that are pegged to fiat currencies in this emerging ecosystem. All tokens are not created equal. In some projects, there's a risk that everything goes to zero. We urge those investing in the ecosystem to educate themselves in these new financial projects. Never invest what you're not prepared to lose in entirety." What is DeFi? Decentralized finance is a system by which financial products become available on a public decentralized blockchain network, making them available for anyone to use rather than going through middlemen represented by banks or brokerages. Unlike a bank or brokerage account, a government-issued ID, social security number, or proof of address are not necessary to use DeFi. DeFi refers to a system by which software written on blockchains makes it possible for buyers, sellers, lenders, and borrowers to interact peer-to-peer or with a strictly software-based middleman rather than a company or institution facilitating a transaction. This means it is a trustless system and it costs the user much less than traditional means of gaining financing. For the system to work well, it needs stability, and the very nature of cryptocurrency is instability. Why does it need stability? It needs stability because if you, for example, receive financing for the amount of $100,000 and the market suddenly gains or loses 20%, which is not uncommon in the crypto market, then you or the issuing authority loses or gains $20,000. Stability would mean that that variable is much less. Is Mark Cuban's statement cause for concern? The very purpose of cryptocurrencies is to escape centralized authority, which does not always have the interests of the middle to lower class in mind when they initiate an action which causes a major shift in the economy. Cryptocurrencies seek to escape that control, but in exchange, we have to know that in most cases, the crypto universe is the new Wild West. Anything goes and anything can happen. Can we accept that? If we do, and I think we should, then the less regulation there is, the better. However, Cuban did talk about regulation of the DeFi market. Decentralized finance is a great idea, but as can be seen, there are many pitfalls. Maybe regulation is in order, but who regulates them? The same people who supported the banks during the 2008 economic crisis? It's common knowledge that many lost their pensions and banks were part of the reason for the 2008 crash after all. It doesn't matter if banks caused the problem, they definitely did not lose in the deal as bailouts were being offered left and right. The quickest way to get regulated is to cry foul and to start scaring people. Remember a little thing called the Patriot Act? That legislation was offered due to the fear caused by 9/11. Americans were willing to give up their liberties for a false sense of security. In the end, maybe the best thing about it all is that because of the way cryptocurrencies is set up, regulation can only do so much anyway. In fact, the only areas for concern is where cryptocurrency gets traded and stored on websites owned and run by people who are not without fault and have often ulterior motives, such as we learned with companies like Mt. Gox, Robinhood. It decided to freeze trades for GameStop on January 28th, swinging the market in favor of Wall Street investors, and Myriad Trading International. As long as there are people out there who want to take your money from you, you will always be vulnerable. That concludes our video for today. Do you have any thoughts on Cuban's call for regulation? Feel free to leave your thoughts and predictions in the comments down below.